So welcome back. We're going to talk about how to get crypto exposure in your Roth IRA or your IRA without actually having to invest in cryptocurrency. Since let's face it, I personally don't want to get a crypto IRA. I want to keep my regular IRAs, but I like to get some exposure on the potential upside of investing in cryptocurrency. So that's the kind of question that I kind of pose today is how can I get exposure to cryptocurrency without actually having to buy cryptocurrency, since I can't do that in my SEP IRA or my Roth IRA. And so we're going to cover 5 different things. Again, not a CFP, not a CPA. This is just me trying to go through, think of a question, and figure out ways to kind of get around that problem of I can't buy Bitcoin, I can't buy Ethereum, I can't buy Cardano in my regular old Roth IRA. So how do I get that exposure to cryptocurrency if I want to capture that growth but still maintain the tax savings benefit? And so let's get started with number 1. This is actually something I'd done in 2020. I'd done it in my actual brokerage account, not in my Roth IRA, but I invested in PayPal. If you don't like PayPal, you could consider Square, but both of these companies are having some involvement in the cryptocurrency space as a source of revenue. So by using these companies within your Roth IRA, or in my case, my SEP IRA is what I use for speculative trading, you can potentially get some peripheral exposure, but you get to be diversified. So PayPal is not just strictly cryptocurrency. So you might get some of the upside, but you're not going to get the full upside. So that could be a positive or a negative depending on your stance on cryptocurrency. So again, not trying to convince you that it's a good or a bad, just trying to open your eyes to some different approaches. So let's look at PayPal a little bit more. So I don't like to look at income statements and analyze every single one all the time, but I thought for this one, it'd be worthwhile. But this video isn't going to be trying to break down income statements for all 5. But for this one here, Q3 for 2021, total payment volume was $310 billion. That was up 26%. Its net revenue was $6.18 billion, up 13%. Its GAAP EPS was 92 cents compared to 86 cents in Q3 of 2020. Its non-GAAP was $1.11 compared to $1.07 in Q3 2020. Just a little kind of tidbit. So the non-GAAP adjusts to exclude irregular or non-cash expenses such as acquisitions or restructuring. So it helps smooth out any kind of earnings volatility. So that's the non-GAAP versus GAAP, which is just the standardized accounting principles. I would go to Investopedia if you want to read a little bit more about that. Then going on, operating cash flow was $1.51 billion, growing 15%, and the free cash flow was $1.29 billion, going up about 20%. And so for this, just note that free cash flow is operating cash flow minus any capital expenditures. And so that's just kind of a brief look at some of the kind of fundamental analysis of PayPal that you might want to dig into before starting position in a company. Some other things to pay attention to is kind of what they're involved with. So they actually own Venmo. So Venmo is something that is coming into the news recently with Amazon, as there's making a commitment to next year having Venmo being a way of paying for purchases on Amazon within the US. Another thing they talked about was October 2021, they acquired Paidy, or Paidy, but this is a leading two-sided payments platform and provider of buy now, pay later solutions in Japan. And it was bought for $2.7 billion in cash. And it's thought to kind of help increase relevance in Japan, as it's the 3rd largest e-commerce market. So I think that is a strategic move. And PayPal savings, it's also trying to do savings, in-app tools, reward programs, trying to get 2-day early within direct deposit. And so when you're looking to get into PayPal for maybe crypto exposure, you're going to be getting some of these other kind of products that PayPal is actually focusing its money on and growing. So it's a way of kind of hedging. You're not just putting all your eggs in your Roth IRA into cryptocurrency. Like you've seen with Bitcoin, it can have flash crashes. It can go from low to all-time high with 30% drops multiple times within a year. And so if you are getting close to retirement, that might not be something you want to be doing. But everything is different and unique depending on your timeline, what your expectations are, what your risk tolerance is. And so this isn't for everyone. But moving on to kind of other things, it's expanding its crypto offering with PayPal through the UK. It's trying to do some cash back with crypto, kind of with the PayPal services that it offers. And then it offers you Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. I think Square might just only do Bitcoin or one or the other. I can't remember. I don't use that one personally. Personally, I use Venmo and PayPal. And then crypto, there's no wallet, but if you ever were to have your account hacked, they will reimburse you. And so there's some security to doing your crypto in PayPal. But a lot of people talk about this as being your gateway. So you're not sure you want to do crypto, you don't necessarily want the wallet, but you want to try it. This is a great way to dabble. This is your first foot across that threshold. And that's another reason why PayPal could be kind of successful as we try to get higher kind of utilization of cryptocurrency among kind of everyone here. Moving on to number 2, if you go back to my 5XYZ on the metaverse, you'll hear me talk a little bit more about NVIDIA. So I'm not going to kind of go into all the same stuff, but for NVIDIA, it makes chips, okay? It makes these GPU chips for gaming, but spoiler, it's also heavily used in mining. So we're going to talk about that more with Hut 8 mining, but the GPU is crucial to mining. You need a high enough hash rate, and this is dependent on these chips. And NVIDIA makes a lot of them, okay? With NVIDIA, you not only get access to gaming, you get access to the chips for mining, you get access to the chips for autonomous driving with the car. Not to mention NVIDIA, as I talked about in the previous videos, trying to go into AI, the metaverse. And so again, you find a way to get exposure to crypto within your IRA, but with diversification to other markets. And so for me, I like to hedge. I don't like to put all my eggs in one basket. I'm slightly a bit of a pessimist. And so for me, it's always nice that for my retirement savings, money that I know I have to depend on later on, I don't want to put all my eggs in one basket in case everything goes to pot. Number 3 is going to be Coinbase. So Coinbase is a centralized exchange, but turns out they do a little bit more than that. So you have Coinbase, you have Coinbase Pro, but there are other aspects to it other than the centralized exchange. They have a debit card where they're trying to do cash rewards in cryptocurrency. There are some people that have it, but they're trying to slowly roll it out so that demand doesn't outpace what they're actually able to do. Other things they're doing is having the in-browser wallet with Coinbase Wallet. They have Coinbase Cloud. They're trying to, like they said in their quarterly earnings report, they want to be an Amazon web-like service for any business that wants to build in the cryptocurrency. So they want to build the tools so that there can be easy adoption within businesses for cryptocurrency. And so Coinbase is an interesting one because they are not just the centralized exchange. They're trying to branch out to different things. Like I mentioned, a debit card, a crypto wallet. They're trying to do Coinbase Cloud, but they're also doing NFT offerings. They're trying to get into direct deposits. They even have kind of mergers and acquisitions where they're trying to help develop strategic partnerships or build out things such as the metaverse, Web3. They even have a thing called Coinbase Ventures where they put money into OpenSea, Uniswap, tax things like CoinTracker. And so they got their fingers in a lot of different pots. And so Coinbase is an interesting investment because you have the diversification of all the different players within the crypto space, from Uniswap, which is a decentralized exchange, to Coinbase, which is a centralized exchange, but also cloud-based infrastructure. Like a lot of companies rely on Amazon Web Services. They're hoping that a lot of companies will rely on them for their services for integrating crypto into their actual business. And so these are things to keep an eye out on. So Coinbase is one that I'm starting to add a little bit more to my position. I had previously been swing trading it. I have a small position on public where I did my stock market experiment where I just had $100 and I was just watching it throughout this year. It's actually up around 40% since when I first bought in. But because I was just doing those $100, I was trying to track it. I haven't added to it. I did that more in my SEP IRA, but I recently sold off to kind of convert it to the next one we're going to talk to. So next one is number 4. It's called Hut 8 Mining. It's based in Canada and it's a Bitcoin mining operation. So as you kind of notice, we're kind of going on different themes. So the first one was PayPal and Square, which is a way of getting a company that has peripheral exposure to stock. Then we went with number 2, which is NVIDIA, which is producing the chips for mining. So it's basically the shovel in a gold rush. Number 3 was Coinbase, which is a centralized exchange. Number 4 is this Hut mining, which is actual Bitcoin mining. And so let's talk a little bit more, but they basically have over 5,000 Bitcoin held in reserve. They have a final delivery of 10,000 NVIDIA chips, which has proven to be highly efficient for them. Okay, so what they say, they're mining at a total cost of under $3,000 per Bitcoin, which means their kind of margins is around 95%. And so you hear the word NVIDIA again. And so you invest in NVIDIA, well, it's helping with mining at Hut 8. And so that's how you can get these different exposures to crypto within your IRA without physically having to put Bitcoin in there or Ethereum or whatever cryptocurrency floats your boat. So during Q3 2021, there was 100% Bitcoin deposited, so they didn't have to liquidate or sell any to help with their operating expenses. They've increased their hash rate. The inventory of Bitcoin and kind of what they have has been steadily going up. Like I mentioned, they haven't had to sell it off. They've even gone into mining on Ethereum and gotten their payout in Bitcoin. And so they're finding ways to make money. It had a big jump compared to what they were doing before. But Hut 8 isn't the only one out there. There are plenty of other ones. So other things to look at are going to be Argo Blockchain, or ARBK. There's Bitfarm, BITF. There's Riot Blockchain, RIOT. And then there's Iris Energy, or IREN, IREN. This actually went public today when I'm filming it. And so I had gotten 20 shares on Robinhood with their pre-IPO, and it instantly went south, went down about 12%. I ended up going ahead, buying some more in the SEP IRA because I thought IREN has a push towards clean, renewable energy with mining, and I thought this would be something popular, and it continued to go down. So I think it's down about 20% the last time I checked from its initial IPO. So we'll see what happens. I plan on holding this one for at least a couple of months to see what happens. There's a lot of kind of badness going on within the crypto markets due to the new kind of legislation that got passed with some ambiguous wording that is negative towards kind of cryptocurrency as a whole in terms of reporting and taxation. And so the whole market within crypto is kind of not a good place, but I see that personally as a buying opportunity. And so I'm just trying to buy into Bitcoin, Mana, the things that I think are going to have long-term kind of price appreciation. But that's just my personal speculation. Going on to number 5 is going to be the last one. It is BITO, BITO. This is ProShares Bitcoin Strategy, and it's the first Bitcoin linked ETF. Okay, on their website it says specifically that BITO offers investors a familiar way to gain exposure to Bitcoin returns with the liquidity, transparency, and tax efficiency of an ETF. So the ETF has an expense ratio of, I think, 0.95%. Its inception was October 18th, 2021, and it attempts to track the Bitcoin without ever holding the Bitcoin. So in an IRA, this might be kind of interesting. But for anyone else that's not trying to get Bitcoin exposure in an IRA, I don't necessarily see the point. You have Public, SoFi, Robinhood. You can just buy Bitcoin. If you're going through Apex, there's a 1 to 2% markup, so technically you are having expense. If you're holding on a centralized exchange, you're going to have the expense and then a little bit of a tax headache in terms of reporting. But I don't see the whole point of this I'd rather just hold Bitcoin if I wanted exposure to Bitcoin. I can have it on Public, Robinhood, SoFi. They're going to give me the miscellaneous 1099 to make my tax reporting a little bit easier. So I don't really understand the whole point of this ETF, but hey, if you got a different take and you want to tell me, educate me, I really would appreciate that. This is something that's new to me. I'm still trying to understand all these different things. If you've been following along, cryptocurrency, honestly, something that I only recently in August started learning more heavily. I'd started investing in May, but it was only in August that I made a commitment to read and kind of go down this rabbit hole. So if you have a take on BITO and why this is a good thing, then I'm all ears, but I'm not trying to do options trading on it. I don't think I really want this. I actually had bought it when it first came out just to see, and then sold it and put it into some of the mining operations like Hut 8 and Riot. But like I said, who knows why someone would want it. You can also even do kind of Venmo where you can buy Bitcoin, or I think on Square or Cash App. So again, not sure what the point is, but again, these are the 5 different ways you can indirectly get exposure to cryptocurrency within your individual retirement account. These accounts right now don't have the ability to just buy Bitcoin, Ethereum, whatever have you. And so you have to find clever ways of indirectly getting exposure to it. And so that's what this video is about. It's not to say these are buy and sell recommendations for the 5 that I talked about. This was just to start the conversation about different ways and things that you might want to do. If you're really young and you think this is the future, having exposure to cryptocurrency within your IRA might be good. But you know it's volatile. If you're getting closer to retirement and you're having to withdraw from your retirement savings sooner rather than later, this might be a terrible idea to get exposure to cryptocurrency because of the volatility. You might be better off just saving your Roth IRA for more stable things like blue chip stocks or dividend stocks, and then maybe get some of that exposure in your taxable account or get a centralized exchange. But don't forget to like, subscribe, leave some comments about what you like to hear about. I still don't know what the next kind of transition is going to be in terms of my multiple brokerage personalities, the current one, my 5XYZ. I was thinking about doing individual ones on a single crypto at a time, just kind of like I did on Public, where I did decrypting Shiba and decrypting Cardano. But it's all up in the air, so love to have your feedback. Thanks for listening. Hope you guys have a great evening.